Ump or dump? That's the big question surrounding VFY Coin right now, and if you've been watching the crypto markets over the past few weeks, you've probably noticed this token making waves across Twitter, Telegram groups, and even in some mainstream headlines. But the real question is this: is VFY Coin just another short-lived pump and dump scheme designed to lure in quick money from unsuspecting retail investors, or does it actually have the fundamentals and long-term potential to survive in this brutal and highly competitive crypto market? Today, we're going to break this down in full detail, so sit back because this is going to be a deep dive. Now, let's start with the basics. What exactly is VFY Coin? According to its white paper and roadmap, VFY Coin positions itself as a decentralized finance utility token with cross-chain functionality, smart contract integrations, and supposedly a unique staking mechanism that offers both yield farming opportunities and governance rights. On the surface, it seems like VFY Coin is tapping into the hottest narratives of the crypto world: DeFi, staking, governance, and interoperability. But here's where it gets tricky. Chine's buzzwords alone aren't enough to separate a genuine project from a scam. Hundreds of projects in the past have used these same terms to attract hype, pump up their token price, and then collapse once the initial wave of investors realized there was no actual product behind the marketing. So, is VFY Coin in that same category, or does it have some real backing? To answer this, we need to look at a few things: tokenomics, price action, developer activity, community engagement, and of course, market psychology. First, let's dive into the tokenomics. VFY Coin has a total supply cap of 1 billion tokens, with around 300 million currently in circulation. On paper, that doesn't sound too bad, but here's where you need to be careful: how are those tokens allocated? From what we've seen, a large portion of the tokens were reserved for the development team and early investors, which always raises red flags because it means a small group of people have enormous control over the supply. If these insiders decide to sell their bags, the retail holders, everyday traders like you and me, will be left holding the empty bag as the price collapses. This is a classic sign of pump and dump potential. But then again, the team has claimed that their tokens are locked and vested over several years, which would prevent sudden dumps. Whether or not that's true, however, is hard to verify because a lot of these so-called vesting contracts can be altered or bypassed by insiders. That's why one of the golden rules in crypto is don't trust, verify. Always check blockchain explorers and smart contract audits before taking a project's word for it. Now, let's talk about price action because this tells a story all on its own. If you look at the charts, VFY Coin launched at a very low valuation, then had a massive run-up in just a few days, lost 300% gains, which immediately put it on the radar of traders hunting for the next moonshot. But here's the thing about parabolic moves in crypto: they rarely sustain themselves. After that massive pump, the coin saw heavy volatility, sharp corrections, and then another wave of buying pressure. This kind of price movement is textbook pump and dump behavior, where whales and insiders drive up the price, create hype through social media influencers, and then sell into the FOMO created by retail investors. The question is this just one big orchestrated cycle, or is it simply early volatility before the project matures? The truth is, it could be both. Many successful coins like Solana, Cardano, and even Ethereum went through wild swings in their early days before establishing a stable market structure. However, the key difference is that those projects had real technology, strong communities, and transparent leadership. With VFY, the jury is still out on whether it has that kind of backbone. Community engagement is another critical factor. If you've been on Twitter or Telegram, you'll see that VFY Coin has been trending in niche crypto circles, with memes, shilling, and a lot of aggressive marketing campaigns. That's both a good and bad sign. On one hand, a passionate community can help a project grow, spread awareness, and bring in new investors. On the other hand, if the community is mostly just hype-driven and not focused on real utility, that passion can collapse just as quickly as it started. We've seen this countless times before with meme coins and high-projector meters SafeMom, Shiba Inu in its early days, or even more recent speculative plays. They pump hard, the community goes wild, but then reality sets in when the hype fades and the token struggles to retain value. VFY needs to prove it's more than just hype if it wants to avoid being lumped into that same category. So, what about the developers behind VFY? This is where things get a little murky. The team claims to be anonymous, which in crypto can be both a red flag and a non-issue, depending on how you look at it. For example, Bitcoin itself was created by the anonymous figure Satoshi Nakamoto, and that worked out just fine. But in the modern era of crypto, when a team remains anonymous, it's often a strategy to avoid accountability in case things go south. If a project fails or turns out to be a scam, anonymous teams can disappear overnight, leaving investors with no recourse. This is why transparency is so important, especially in a market filled with scams. If VFY wants to be taken seriously, it will need to either reveal its team members or prove itself through consistent delivery of products, partnerships, and updates. Until then, skepticism is warranted. Another angle worth looking at is partnerships and ecosystem development. Has VFY Coin actually integrated with any big platforms? Does it have exchange listings beyond small, low-volume exchanges? Right now, it's mostly trading on mid-tier decentralized exchanges with limited liquidity. That means it's still in the high-risk, high-reward zone. If a major exchange like Binance, Coinbase, or even KuCoin lists VFY, that could be a huge catalyst for price appreciation. But without those listings, liquidity remains low, and it's easier for whales to manipulate the market. On top of that, we need to see if VFY has any real-world use cases. Are developers building dApps on it? Is there demand for its staking mechanism? Or is it just a speculative asset with no underlying adoption? These are the questions serious investors should be asking before jumping in. Now let's bring psychology into the mix. Crypto markets are driven heavily by emotifanner, greed, and FOMO, fear of missing out. Projects like VFY thrive on hype cycles because they play directly into these emotions. People see massive gains and don't want to miss out, so they pile in without doing research. That creates a self-fulfilling cycle where the price pumps higher, attracting even more buyers. But when the hype fades or early investors start taking profits, the price collapses, and retail holders panic sell at a loss. This cycle has repeated itself countless times in crypto history, from the ICO boom of 2017 to the meme coin frenzy of 2021. The question is, will VFY break the cycle or become just another example of it? From a long-term investment standpoint, you need to look at fundamentals. If VFY Coin truly has innovative technology, a strong development roadmap, and the ability to deliver real-world solutions, then it could evolve into a serious player in the DeFi and cross-chain space. But right now, most of what we see looks like hype-driven marketing rather than concrete results. That doesn't mean you can't make money with VFY. In fact, speculative coins like this can deliver massive short-term gains if you time the market correctly. But the risk is equally massive, and the chance of being caught in a dump is very high. So here's the bottom line, VFY Coin is showing all the signs of being in a pump phase right now. Price increases, social media hype, aggressive marketing, and a lack of fully transparent fundamentals. That doesn't automatically make it a scam, but it does mean caution is absolutely necessary. If you're looking to invest, treat it as a high-risk, short-term speculative play, not as a guaranteed long-term hold. Always remember the golden rules of crypto investing: never invest more than you can afford to lose, take profits when you can, and don't get caught up in the FOMO. There will always be another coin, another pump, another opportunity. Whether VFY ends up being the next big success story or just another cautionary tale is something only time will reveal. But based on what we know right now, the safe stance is to approach with skepticism, stay informed, and watch closely before making any big moves.